Hello everyone, this is Dan Desley with Justin Havering Associates of Remax First, and this is
Glenn McCormick, Justin Havering Associates. We're happy to see you guys live in person.
Right?
That's right. So it feels weird not doing this by Zoom for once, but it's great. It's great. We just had a great team meeting, great lunch, and here we are with some market update for. What was last month?
Great info. Last month was May.
Thank you.
Yes, you're welcome. We're looking at the month of May. We're looking at this year versus May last year, so 2022 versus 2021. Total sales. So in 2021, we were sitting at 1908. That's in detached. And new listings were sitting at 2731. A little bit of a shift here for this year. We've decreased in both. So 1619 is our total sales, and new listings is 2,221. Now, what that means is that, of course, we've decreased in both, so total sales has gone down by 15% over last year, May, and 18.67% on the listing. So we're staying pretty close to each other in the amount that we're decreasing.
Yeah.
We do not have a lot of inventory still, and that shows in the amount of days on market. So the average amount of days on market all the way across Calgary, detached, is sitting at 22 days on market is the average.
Yeah.
This is Rowan Townhouse, so all of Calgary, this is all of May this year versus all of May last year. Last year, total sales 417, this year 554, so increase of 32%. That's a healthy increase. New listings as far as last year, 658 versus 772 this year, so 17% versus 32% increase in sales. That, of course, is driving down our days on market. Days on market for Rowan Townhouse style. We are sitting at 24 days on market as the average for the month of the May. So obviously, that's that lack of supply is definitely driving down the days on market.
Yeah.
Want to do apartments? Then we'll go in.
Yeah. Okay.
Yeah. Sure.
We'll finish off.
Keep this going. So apartments, that's a fun one. So we've always had a little bit of gloom and doom when it comes to discussing condos, apartment style condos. It is definitely moving in a different direction, albeit a bit slowly, but still. So total sales, 2021 for apartments, 379.
That was kind of average?
That was kind of average.
Yeah.
This May, 630. Increase of 66%.
Pretty
New
good.
listings, we were sitting at 797 last year. This year, 948. So that is an 18% increase. Now, active listings is interesting as well. It has actually decreased by 27%. So we are down to 34 days on market average in apartments. That is really good news for people who own condos. The last couple of years have not been pretty for condo owners. So I like what we're seeing there.
Apartment condo owners are probably getting more showings these days than they were if they were trying to sell their apartments last year. So that's all good. And they're going to get more money too. I'm going to talk about money. So benchmark prices, total residential in Calgary is sitting at $546,000 as a benchmark price. That's up 14.5% from a year ago. Detached market specifically, 648,500. That's up 16.6% from a year ago. We've got semi-detached is up 14.6%. Row is up 16.7%. And apartments, again, the whole apartment, the resurgence of the demand for apartments, this is fairly new still. So it's just 9% higher in value appreciation year over year, but that's definitely some good news for apartment owners when it was just doing this the whole time last year.
Yeah, it is.
Now, moving forward, obviously this market has slowed down. It's not slowing down, it has slowed down, and that's primarily due to, several factors. We can say, for sure, I can say that interest rates are one thing. When the interest rates go up, people are kind of sitting back thinking, oh, geez. Gives them reason to pause for a little while, but I think a lot of those buyers end up coming back. The other reason is because we already had our hot spring market. It just happened in January and February and March. And so a lot of those buyers that were waiting to, get that home, they just kind of jumped ahead of the line and bought them already.
That's a good point. And a lot of people who would have been normally listing in the spring market saw what was happening and decided to jump in a little earlier than they may have as well. So
there's that feeling when you have overall low inventory that people are like, oh geez, if I don't buy a house now, maybe I can't buy it in May or June when I was originally planning to buy it. So I think a lot of those people did that already. Months of inventory. So last year, total residential, there was about 2.28 months of inventory on the market. It would take 2.28 months to exhaust the inventory that we had, based on the number of sales and inventory, of course. So this year, so right now, it's sitting at 1.69, below 2 months of inventory. That's a seller's market still.
Yes, it is.
So yeah, things have slowed down, but you know what? It's just all about perspective. We're still in a seller's market according to these numbers here. Detached is pretty much the same actually year over year. It was at 1.68 last year in May, and this year May 1.58. Pretty much the same. Semi-detached 1.68 currently was 1.68 was last year. 1.51 this year. Row. This is a big change, only sitting at 1.5 months exactly, 4 months of inventory. And last year, this time, it was at 2.56, over 2.5. So we're down over a month of inventory on those row townhomes. And then apartments, this is the winner.
Yes.
We were over 5 months of inventory of apartments this time last year, and now we're sitting at 2.24.
Wow.
Yeah, 2.25 months. And then, they would be all gone. I think we can probably expect still some buyer hesitation out there based on those interest rates climbing. But let's face it, Dan, if I'm a homeowner and I need to sell now, maybe I'm not going to get 10 or 15 offers that I would have if I listed in late February or middle of March or something this year. But my home is worth between 10 and 15% more than it was a year ago, so that's still pretty good. And those numbers haven't changed. Benchmark pricing has more or less flattened out these past months. And what do you think, Dan?
I think that I fully agree with you. I mean, it's easy to look and see that. Well, we want the stacks of offers. Of course, that's a lot of fun to deal with. But yes, when we look at all the action that happened earlier on this year, it's definitely impacted the price points now. Now it's a matter of course, the market will still reject a home that's not priced properly or that isn't marketed well. Yeah. So that's all paramount still, but it's still a really good time to jump in, and that is if it's the right time for you.
Yeah.
If you have been holding on to a condo for a while and you've been maybe renting it out, just waiting for things to turn around, this might be the time to reach out and ask for a check-in to see what value is sitting at right now.
Yep.
Always more than happy to do that. So looking to buy or sell, this is a good time to take advantage of that still.
Yeah. My final thought is, and this is shared by our team leader, Justin Haverberg, Alberta is in a great position right now.
We really are. Yes.
Oil and natural gas are high, and traditionally that means good market for Albertans. A lot of the news headlines we see out there are coming from places where they don't have what we have right now in Alberta. Ontario, right? When you look at the media, it could often give you the feeling that the sky is falling, but we think differently here in Alberta, and I think that we're in a good position here to thrive. We don't expect those skyrocketing prices for a while yet. I think that's over, and that's okay. But you know what? If you are thinking of buying, if you're on the fence, then those interest rates are going to continue to rise. That's something we can predict. So, it's still traditionally lower than what it has been.
Yes, it is. Very good point. Awesome.
All right.
Hey, Glenn, this is great. Thank you for joining us once again.
Thanks, everybody. We'll see you next time.